Well, greetings and salutations, test takers. This is the Series 7 Guru coming to you from my off-grid studio, getting our kicks on historic Route 66 with another explication request. If you have an explication request, you can send it to explication request at guruexamprep.com. Corporate bond is convertible at 25. I can't stress this to you enough. The minute you get the conversion price, you have to say bastards. I don't need the conversion price. I need to establish the conversion ratio. The conversion terms are based on par. So before I go further, I want to figure out what is the conversion ratio. So I take par, I divide by 25. Now I'm back in business. I have the conversion ratio. So I can turn this bond into 40 shares of the common. Now, almost always, this is whether they ask you point blank parity or not, it's going to be a parity calculation involved. I would expect you get one, maybe two parity calculations, and you can't be fumbling around. Parity means equal, right? So we got to figure out what this bond is equal in terms of the stock, or the stock equal to the bond, parity to the bond, or parity to the stock. So that's where these questions usually end up. Okay, so now they tell me that the stock is trading at 30. So if I can turn this bond into 40 shares of a $30 stock, I would be getting $1,200 worth of that stock, right? So that's going to be important deciding what I want to do. That's called parity of the bond. The bond is worth $1,200 worth of the stock. Okay, so it indicates that the bond will be called at 1,150, right? So they're going to call it, we'll let the bond be called. We get 1,150. If we convert, we get $1,200 worth of stock. This is called a forced conversion because the issuer knows the economics are such that rather than asking for the money, you're going to ask for the stock. Wait till the corporation makes a better offer? No. Don't ever be kind of passive in terms of your answers, like I'm going to wait and maybe they hire me and make me something higher offer. No. Purchase traditional bonds? No. It's either going to be convert. The choice is either convert or let the bonds be called. And so here we say, okay, well, boom. Do we want $1,200 worth of stock or do we want $1,150 in cash? The answer is we're going to convert to get the $1,200 worth of stock. So I hope that was helpful. Again, parity calculations, whether or not this question didn't specifically ask you parity, but whether they ask it or not, you can count. You need to know the conversion ratio. You need to be able to get parity to the bond. We multiply. To get parity to the stock, we divide. If I ask you what would the equivalent price of the stock be for what we paid for the convertible, we'd take the current market price of the convertible and divide to get parity of what we call the stock. I think more likely you're going to get parity of the stock, but oh well. Remember, inch by inch, parity is a cinch. Yard by yard, parity is art, and I'll see you for the next explication request.